Hello everyone, welcome to lecture number 39 of BHU SWAYAM course on Fundamentals of Economics and Financial Markets. Myself Dr. Anand Singh, and today in this particular video I will be discussing with all of you regarding some of the major functions of stock exchanges. All those functions which are basically delivered by the Indian stock exchanges. Now, in this particular video, I will be discussing with all of you with regarding some of the important functions such as the function of intermediary. That means the stock exchanges, they act as an intermediary or middleman in our financial markets. The function of registered intermediaries are only permitted at the stock exchanges. In the same manner, we will discuss regarding the stock exchanges guides in the case of new issues. Next, the speculative dealings are permitted at the stock markets. Then the function of listing of securities. Then we will discuss regarding the function of dematerialization of securities. Next, we will discuss regarding the function of stock markets in which they provides a platform for the public debts. And in the final segment, we will discuss regarding one of the major function of stock exchange, that is concerned with the globalized trading of securities. Now, in the last video, we have already discussed regarding some of the important functions of stock exchanges which were concerned with the function of capital formation, the function of transactions permitted in smaller lots, the functions of continuous price formation of securities, the function of screen based trading, the function of liquidity of investments, the function of safety in dealings, and the function of concept of circuit breakers. So, all these functions have been already discussed by me in the last video. Now, let us start this particular video. First of all, let us understand what is the exact meaning of a stock market. Now, as per the definition, stock markets are basically a recognized places which provides a platform for the trading of second-hand listed securities. Now, the government of India, in order to recognize the stock markets, it basically introduced an act, and the name of that act was SCRA 1956, that is Securities Contract Regulations Act 1956. So, all those companies, all those organizations wishes to act as a stock exchanges in our country, they are supposed to fulfill the provisions which are stated under Securities Contract Regulations Act 1956, and thereafter only the central government is going to grant permission to act as a stock exchange. Now, as per or after fulfilling the norms of SCRA 1956, Bombay Stock Exchange was the first stock market which was granted recognition of a stock exchange. But what is important here, all the stock markets which are operating in our financial markets, those are basically recognized by the central government. If it is not recognized, then such markets are basically popularly known as Dabba markets. But here we are discussing regarding all the functions which are basically given by or recognized stock exchanges. Now, trading is basically permitted only in securities, that is second hand or listed securities. Now, let us discuss regarding some of the important functions of stock exchanges. It is said that the stock markets act as an intermediary or middleman. Now, the stock exchanges are such kind of financial intermediaries that act as a middleman in the financial market. It acts as a middleman between the buyers of the security and the sellers of the security. That means the companies and the investors. Why companies and investors? Because the companies, they are basically offering their securities, and by offering their securities, they need capital, they need resources from the market. At the same time, at the other end, investors are there. The investors have money. They want to make investments in the stock market by purchasing the ownership of those securities, by purchasing those kind of shares. So, the investors will make investments, they will supply money, and the companies, they will supply their securities. So, the stock markets, they basically provides a platform for the interaction of the companies who are seekers of fund and the investors who are basically the suppliers of funds. Now, companies list their securities over the trading platform of stock exchanges, and the investors have an opportunity to buy those securities. Stock exchanges monitors the trading and ensures the safety of transactions. Now, let us discuss regarding the second important function of stock exchange. That is, only registered intermediaries are allowed to participate in the stock market. In the stock exchanges, only registered intermediaries are allowed to participate. The registered intermediaries helps ensure fair pricing, maintain transactions integrity and provide liquidity. Also, the registration of intermediaries is mandatory. The registration norms are laid down by SEBI. SEBI, all of us knows that SEBI is basically the market regulatory body. So, according to SEBI, all the intermediaries who are going to participate or who are willing to participate in the Indian stock markets, it is compulsory for them to get themselves registered. And what shall be the procedure, what shall be the requirements, all such kind of procedures and requirements are going to be laid down by SEBI only. So, the registration norms, they are basically prescribed by SEBI. After fulfilling those registration norms, the intermediaries are permitted to make or to trade in our stock markets. Now, these intermediaries are licensed and authorized by SEBI to trade in stock markets. That means after fulfilling the norm, if SEBI is satisfied, then it can grant permission. It can grant permission to those intermediaries to participate in the markets. For example, large number of intermediaries are there, such as merchant bankers are there, custodians are there, or depositories are there, banker to NSU is there, brokers are there, sub brokers are there. In the same manner, one of the intermediaries, stock exchange, it is also a registered intermediary. That means if a stock exchange is granted permission by the SEBI, then only stock markets are allowed to permit or are allowed to work in our capital markets. In the same manner, a registered stock market basically grants permission or it grants permission to only registered intermediaries and only the registered intermediaries are allowed to participate in the stock exchanges. So, each and every participant, whosoever is dealing with the listed securities, is registered either with SEBI or with some of the stock exchanges. Now, let us discuss regarding the next important function, and that is stock markets guides in the case of new issues. Now, the rules and regulations for the new issue market are framed by SEBI and stock exchanges. Yes, it is 100% sure that the stock markets, they also frame rules and regulations for the new issue market. They guides in the matters of new issues. Now, let us understand why stock markets, they prepare rules and regulations for the new issue market when SEBI is already there. Yes, SEBI is the market regulatory body. It is going to frame rules and regulations for the entire market. That means whether it is primary market or whether it is a stock exchange. For both the markets, the rules and regulations are initially framed by SEBI. But in case of new issues, in case of primary markets, they are also monitored by the stock exchanges. The stock exchanges also frames rules and regulations, or they basically guides the new issues. Now, after fulfilling the guidelines of SEBI, the companies are supposed to fulfill the guidelines framed by the concerned stock exchange where the company wishes to list its securities. Now, here we are saying that concerned stock exchange. Now, let us discuss this particular thing with the help of an example. Suppose there is a company, ABC Limited. It is floating its securities in the primary market for the first time. Now, suppose in its prospectus, ABC Limited has clearly stated that it is going to list its securities over Bombay Stock Exchange in future. That means initially ABC Limited is supposed to fulfill the SEBI guidelines related to the primary markets, and thereafter it has also to fulfill all the guidelines, all the rules and regulations, or all the norms which are prescribed by Bombay Stock Exchange. After fulfilling the SEBI norms and after fulfilling the guidelines which are prescribed by Bombay Stock Exchange, then only that particular company's shares are going to be listed over that particular concerned stock exchange. So the companies are supposed to fulfill the norms of the concerned stock exchange where they are willing to list their securities in the future. So it is said that the stock exchanges, they guides in the cases of new issues. Also, the stock exchanges may frame additional rules and regulations besides SEBI. It is not mandatory that whatever SEBI is stating, that is enough. No, besides the rulings of SEBI, the stock market may ask for additional requirements. This function or this particular power has been given to the stock markets by SEBI itself. SEBI has asked the stock exchanges to ask for additional requirements if the stock markets are of the opinion that additional information should be taken from the companies. Now, why they are asking for additional rules or regulations? For or such kind of rules and regulations must be fulfilled by the companies before listing their securities. Then only listing norms or listing conditions will be fulfilled and listing at that specific stock market will be permitted by the stock markets. Now let us discuss regarding the next feature that is concerned with speculative dealings. It is said that at stock exchanges or on the stock exchanges, speculative dealings are permitted. Now let me clarify here that there is a difference between speculation and gambling. Speculation is not gambling. In case of gambling, your entire amount might be zero within a fraction of time. For example, suppose if you have invested 100 rupees, then that 100 might be zero within a fraction of time. That is basically gambling. But such kind of things are not happening over the stock markets. On stock markets, speculative tradings are permitted. Now let us discuss what is the meaning of speculation. Speculative dealings are permitted at stock exchanges and are a major part of the stock markets. Now, speculative trading is a high risk investment strategy where traders buy and sell stocks to earn short term profit. That means speculative tradings are basically done by the traders, or speculative tradings are basically done by the investors in order to earn short term profit. So with the objective of short term profit, the speculative dealings are basically done by the traders, and such kind of speculations are permitted in Indian stock markets. There is also a difference between speculation versus trading. Normally it is said that trading is done in the stock markets keeping the long term profits in mind. That means frequent selling is not done in trading. If a person is investing for the purpose of trading, then he is basically investing that particular amount for a longer span of time in order to have longer profit or profits in the longer duration of time. But speculative dealings are basically concerned with short selling, or they are basically concerned with the objective of profits in the shorter span of time, or frequent selling or frequent buying is done by the persons in order to have a short term profit. So speculative dealings, they are permitted in our stock markets, but they are different from gambling. Gambling is not permitted. At the same time, they are also different from trading. Now let us discuss regarding the next important function, which is concerned with listing of securities. As such, I had to discuss this particular function in very detail in next few videos, but let me clarify regarding this particular function in very brief. Listing basically is concerned with the formal admission of securities on the trading platform of stock exchanges. Now, listing of securities is voluntary in nature. That means it is not compulsory for the companies to go for listing. But if a company has specified in its prospectus that in future it will list its securities over any stock market, then in that case listing becomes compulsory for that particular company. Also, for the purpose of trading at the stock markets, listing becomes compulsory. That means suppose a company is willing to list its securities or trade its securities over any stock market, say Bombay Stock Exchange, then in that particular condition, for trading purpose, listing becomes compulsory. Otherwise, listing process is is voluntary in nature. That means it depends upon the company whether it is going for listing or it is not opting for listing. Now, the listing norms, they are basically supervised by CLA, that is Central Listing Authority. Basically, SEBI established CLA in April 2003, and that particular body, that means Central Listing Authority, that particular body comprises of 11 members. One member was chairman and rest of the 10 members were members. They were simply the part of that particular body, that is CLA. Now, SEBI Listing Obligations and Disclosure Requirements Regulations 2015. This particular regulations is also known as listing regulations. Now, these regulations were issued by SEBI on September 2, 2015, and this particular regulation came into effect on 1st December 2015. That means nowadays the SEBI listing regulations are basically governed by SEBI Listing Obligations and Disclosure Requirements Regulations 2015, which is effective from 1st December 2015. Now, let us discuss regarding the next major function, that is concerned with dematerialization of securities. Now, in this particular function, we will discuss regarding what is the meaning of dematerialization of securities and why such kind of thing was passed by the government of India, or why such kind of thing was basically passed by SEBI. And we will also discuss regarding when this particular function was introduced for the first time in the Indian financial markets. Now, dematerialization basically indicates the process of conversion of physical form of securities into electronic form. The electronic securities are then stored in a demat account which is managed by a depository. So, dematerialization, the process of dematerialization is basically concerned with the conversion of physical form of securities into electronic form. All of us knows that earlier, that means prior to 1992 or during the earlier period, the physical form of securities were traded. Now, thereafter the government or SEBI decided to dematerialize the securities, and the process of dematerialization or the basically things which were concerned under dematerialization was concerned with the conversion of physical form of securities into electronic form. Now, as such, dematerialization is not compulsory. That means it is not compulsory to convert your physical form of securities into electronic form. But for trading purpose, that means if you are willing to trade your securities at the stock markets, then dematerialization of securities becomes compulsory. So, dematerialization is not compulsory. That means it is at your option, it is at the option of the shareholder itself that whether he is willing to convert his physical form of securities into electronic form or not. But if the shareholder is willing to trade those securities with the stock market, then dematerialization becomes compulsory. That means he has to convert his physical form of securities into electronic form for the purpose of trading. Now, as per SEBI, all private companies except those classified as small based on a specific financial threshold must dematerialize their securities by September 2024. That means except the small companies, SEBI has basically asked each and every other company who is basically trading over the stock markets, or all those companies who are not categorized as small companies according to SEBI, then they are supposed to dematerialize their securities latest by September 2024. So, in this condition also we can say that dematerialization of securities is not compulsory. Why? Because still SEBI has not basically asked the small companies to dematerialize their securities. That means still today also the small companies, they have an opportunity, or if they are willing, they can have the physical form of securities. Now, except the small companies, all other companies, that means the medium scale companies and the large companies, they are basically instructed by SEBI. They have been basically ordered by SEBI, or you can say they have been basically advised by SEBI to dematerialize their securities before September 2024. That means till September 2024, all the mid-cap companies and all the large companies, they are supposed to dematerialize their securities. That means they are supposed to convert all their physical form of securities into electronic form. But then also it is clear that till today dematerialization of security is not compulsory for all the companies. Now let us discuss regarding some of the benefits of dematerialization of securities. Why the government passed such kind of orders, or why SEBI has instructed the mid caps or and the large caps companies to dematerialize their securities. There might be certain benefits. That's why the SEBI has asked all other companies except the small companies to dematerialize their securities. Now, in India, there are two prominent depositories, that is NSDL and CDSL. Now, NSDL basically indicates the National Securities Depository Limited, whereas CDSL basically indicates the Central Depository Services India Limited. Now, both these two depositories, NSDL was established in 1996 and CDSL was established in 1999. Now, both these depositories, they are basically concerned with the dematerialization of securities. That means they are responsible for converting the physical form of securities into electronic form. Now, the dematerialization of securities have the following advantages. Point number one, it eliminates the risk. Risk regarding what? Because physical form of securities can be lost, they can be stolen, they can be forged, but demat eliminates these risks. That means demat securities, they can't be stolen, they can't be lost, or they can't be forged. Why? Because there are depositories who are going to supervise your electronic form of securities. The depositories like CDSL and NSDL, they have a proper look over your securities. Now, the second important benefit which is concerned with dematerialization of security is it simplifies the management. Now, demat makes it easier to manage and transfer shares. Earlier, physical form of securities, they were not easily transferable from one person to another. Prior to 1947, it almost took 60 days to transfer the ownership from one person to another. But nowadays, within even T plus 2 or even nowadays T plus 1 has also been applicable. In fact, there are few stocks upon the settlement is happened during a specific day also. That means on a trading day also. So nowadays it has been simplified. That particular settlement procedure has been simplified only because of the dematerialization of securities. And the next important benefit, which is basically enjoyed by all of us because of dematerialization, is it ensures security. That means the demat trading or the securities, the electronic form of securities, they are secured. Why? Because demat accounts use electronic bookkeeping to ensure high securities. The servers of the NSDL and CDSL, they are very prompt. They manage all the securities in electronic bookkeeping form, and it is ultimately secured. So, dematerialization of securities is one of the major function which was implemented by SEBI, and it has given a strong boost to the confidence of the investors. Now, let us discuss regarding the next function that is concerned with globalized trading in securities. Now, securities trading has become globalized, allowing traders to buy and sell securities across a wide variety of markets. Also, stock exchanges have adopted screen-based trading systems or electronic trading or online trading mechanisms. Now, this has increased trading speed and efficiency. It has also reduced cost. At the same time, it has improved market access. Now, because of globalized trading or because of the screen-based trading system, which was basically implemented in the year 1994, screen-based trading system, it was basically implemented for the first time in our country, that is India, by NSE, that is National Stock Exchange, in the year 1994. Now, from 1994 onwards, because of screen-based trading system and because of online trading systems, basically large number of investors those investors are from within the country as well as they are from outside the country. That means the foreigners, they are also permitted to make investments in our stock markets with the help of screen based trading systems or online trading systems. So globalized trading systems basically have been permitted, or they are going on mainly because of such kind of terminals or such kind of systems like screen based trading system and online trading system, or you can say electronic trading systems have been permitted. Now companies can list their securities over the trading platform of foreign stock exchanges also. That means suppose there is a company in our country that is also permitted to list its securities over the stock markets which are registered outside the country, or the stock markets which are basically established and operating outside our country. For example, suppose there is a stock exchange which is situated in USA, then whether a company of our country, that is India, whether it can list its securities over the US stock markets or not. Yes, nowadays globalized trading is permitted in both the respected. The foreigners, the foreign institutional investors, they are permitted to make investments in our country. At the same time, our companies or even the securities of our companies, they are permitted to list their securities over the global stock markets. The companies like Infosys, the companies like Wipro, they have already listed their securities over the foreign stock exchanges. So we can say that globalized trading in the stock markets are permitted, and it is one of the major function which is provided in Indian stock markets. Now in the next video, I will discuss with all of you regarding some of the major defects of stock exchanges. Now in that particular video, I will be discussing with all of you regarding some of the defects such as highly sensitive, that means stock markets tradings are highly sensitive. Then defects like registration norms, why registration norms or defective registration norms are basically uh, uh, adopted by our financial markets. Then defects like greater possibility of risk, then lack of professionalism, then excessive fluctuations in the prices of the securities, then unhealthy and undesirable speculations, then dominance of financial institutions. We will discuss regarding why, if financial institutions are dominating over a stock market, then it is not a good sign for that particular stock exchange. Then we will also discuss regarding the periodic crisis, the poor liquidity of the investments, then opaque trading, then price rigging, and one of the major defect of Indian stock market, that is concerned with insider trading. So we will discuss all these things, all these defects in my next video. Till then, thank you very much for watching this video.